Hello, traders. Happy Friday. It is 8:02 a.m. Chicago time on Friday, the 30th of August. The month of August is done. One more day, August 2019. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1586. We're on YouTube Live as well as Periscope. This morning, risk on again. We gapped up yesterday in the equities, and we're gapping up again this morning. We have, it's significant that we have pushed through last week's high. Remember, this uh, last week was an inside week to 2 weeks ago, and then this week broke the high of last week. So we potentially are starting to one time frame up on a weekly basis on a bigger swing trend, potentially in the S&Ps. So that's how things appear to be shaping up. Risk on with the DAX leading. The overall view of the market is that, well, several news items came across. Consumer discretionary construction among better performing sectors. European markets opened higher. Yesterday's move occurred right after 2 a.m. Central, which is the European cash open. Same today. And overall, there are signs of the market saying that there are signs of new U.S. China trade discussions emerging as these increased tariffs are around the corner. Remember, tariffs are supposed to kick in September and again in December, but that's a moving target. The United States and China gave signs on Thursday that they will resume they will resume trade talks as the two economic superpowers discuss the next round in-person negotiations in September ahead of the looming deadline for additional U.S. tariffs. So that's where we are. The overall picture again is bullish, allocating to risk. European shares were higher, helped by a surge in German real estate companies. Asia equities ended in the green. The dollar firmed up, whereas gold prices fell this morning. Crude oil is also a laggard, down 16 cents or 0.3%. The dollar's down 2 cents or so. The 10 years are unchanged, and the bonds are up 2 ticks. Overall, it seems to be all kind of playing along with the market seeking risk this morning. In terms of what's ahead, one thing to note that is important, one second. One thing to note that is important is that on Monday, it's a Labor Day holiday. I put the Labor Day schedule on Twitter. You can find that on twitter.com / Futures Trader 71. You don't actually have to sign up to be able to see the feed, although you probably should sign up before somebody grabs your name. Monday's a holiday. The equity indices are open till 12 Central, 1 Eastern, but I'm not going to be trading that. So bear that into mind coming in to a long weekend with this elevated trade war risk. And it is the last weekend, official weekend of the summer. School start on Tuesday through most of Canada and the U.S. And so folks are probably going to get their business done early and take off early as well. That's the expectation. So in my mind, I'm prepared to pay very, very particular attention to the first hour in particular after the equities open, and then potentially into the European close, which is the second hour. And then from there on out, I expect not much of anything. So that's something to keep in mind. I'm going to hop right in and look at review what we expected yesterday. The calendar shows that we've pretty much covered everything except for Michigan sentiment, but this is the final number. It's expected at 92.1. That comes out at 10 Eastern. We do get Chicago PMI, which can be a mover. Hasn't done much lately. Um, Haven't hasn't done much lately, but Chicago PMI is a private number, comes out to subscribers around 9:41, 9:42 Eastern, and to the public at 9:45, expecting 47.5. And then again, consumer sentiment at 10, about 15 minutes later. And then from there, we only have MBS manufacturing PMI out of China, which comes out at 9 p.m. And I can guarantee that I will not be here for that. So um, let's take a look at what was expected yesterday. Yesterday we had a gap. We were gapping up into that 29.14 stock zone, and the expectation is we would take out the overnight high, pull back to about 29.03, 2903 being a key area, and then bounce back up, which actually happened. But also what happened is scenario two that you see in front of you, where we pulled back to 2903 and then pushed, even after pushing the high, there was a new spike. But even after pushing the high, the expectation is we would turn up and push towards 2940. Here's what actually happened. Let's kill these. Oops. Let's kill that. So we took out the overnight high almost immediately, pushed down to 29.05 and a quarter, missed at 29.03, which is just below, and then squeezed up into 29.30 and sat sideways. So this is mostly scenario one here. We did leave a gap open, which is marked right here. We did leave a gap open underneath. The market is essentially showing yesterday that it is accepting value above the 3 days since that big drop last Friday. It is accepting value higher and has shifted. Remember the big target yesterday that I mentioned probably a couple times was 29, 28.50, right? So that's where we went in the morning. We went to 29, 28.50 early on, and that's pretty much where we stabilized. 29, 28.50 is the MC point of control, and you know, in a VPOC area, the expectation is it's not just a specific price; it's kind of a zone, and 29, 30, 75 kind of stabilizes in that area. We end up holding 29, 24, 50, which shifts our MC point of control down from 29, 28, 50 to 29, 24, 50, and that will remain a magnet above. But what's important is we traded in this balance for several days. We've had a couple days with overlapping points of control. We accepted higher prices, and now we've accepted prices above there. So we always want to evaluate price versus perceived value, right? And what this is saying is that we are accepting the upper distribution of the selling day. Remember, I said if we exceed this 84, where was it? Well, if we exceed this 28.91 area, um, we move from the lower distribution of Friday to the upper distribution of Friday, and we're likely to tackle that high once that happens and that the auction is proceeding as expected. We took out the 27.75 yesterday to 30.75 and are holding steady. The market's in an uptrend, and so we are moving. We're starting to shift into areas above what we've had for the month of for most of the month of August. We're trading right up here. The overnight high is 29.4650. I've mentioned 29.45 being strong potential resistance on a first touch. But if we'd have to move back, we'd have to move way back into the first of the month here to look at where the market has been, right? So we are right on the edge. Actually, it's much better to show this in a composite chart. Let me pull that up. It's just now that we're outside of the immediate balance, the composite chart's much better at this. Loading the composite chart. Lots of data. It goes back several years. So here's what I'm talking about. So this is an RTH only. Each bar represents 1 day, okay? And the area that I'm referring to is this box right here, okay? So this box, so if you look carefully, you'll note that we've had several tests of this low area, 20, 25, 30, 34. It's an upslope, and we've had several tests in this 40 to 45 area. So you got 40 right here, you got 39 right there, you get 44 right there, and we are right on the edge of that. The overnight high is right here. So now we're starting to push into this zone right in here, selling zone. And we are likely to clear this low volume node on the composite. This is all really important stuff from an auction perspective. What does this mean? This means that if this morning sellers don't step in, okay, if sellers don't step in and press prices below that 24 and a half, then we are likely to see new highs, believe it or not. We are likely to push. This is what the technical picture says. We are likely to push to 3,000. Once we push to 3,000, there is a lot of fuel from the shorts, from the bears to squeeze the market up. Okay, those bears are likely to give the buyers the fuel needed to push through to 3,000 and up. Okay, so this today is where we are today is really important, and I'll shorten this. I'll cut this discussion. It's going too long. This area here, this low volume node, if sellers are not able to hold prices below there, this 45 area, then it's likely to shoot up to 3,000 over the next couple days. Okay, so that's how auctions work. We test, and I guess the better way to show this is to draw a micro composite of what's happened so far. So if we look at this box, this micro composite box, this is basically the balance that we've been in for the entire month of August. The entire month of August, we've been in a range of 28.2050 to 29.44 and a quarter. And this morning, the overnight high is 29.46 and a half. The overnight high is just a little tickle above the top of this box. So we've tested down, all the way up, all the way down, higher low, lower high, higher low, and then we finished yesterday with a gap up, and we are right against that high. This is quite significant, okay? And so the energy built into this bar, this micro composite, this area, 29 million contracts traded in the RTH alone, and we've had some really heavy overnight sessions. That energy, if it starts to clear this 2960 area, this low volume node right here, if it starts to slide down into the low volume node and it's not defended, then the next likely action is to shift up, and we'll put a microcomp on this. So this is the next key region, and then we're starting to now move into, the higher volume nodes in this area, which is right here. So that area right there is 2997, and then the MC point of control at 3007. 3007 is the most likely key test area above. If we push through this low volume node down here in the 2960s, we are likely to push to that 3007. This is how I used to trade weekly options. Just look at multi-days and figure out what areas have been cleared and what areas are likely to be tested, and so on and so forth. Once we get to 3007, if we don't fall off of there and we start to consolidate and put in weak highs and stuff, then we're likely to see a new all-time high again, shocking the market shocking the market into higher prices into the mid 3000s. Okay, so I know I'm kind of forecasting too far, and I'm definitely not an analyst. I'm just a trader. But it's just important to know what the story is. The overnight, I'm going to show you the overnight in the form of CT bookmap rather than a chart. Um, we open back up and we immediately take this upward slide through the high of the prior day. We have a nice pullback, but then again at 2 a.m., which is right here, 2 a.m., the European Open, we open up and we immediately take this very strong, and notice how volume picks up, right here. You start to see the volume bars, these green and red bars down below. Volume picks up on this move, and it's quite meaningful. So if we look at what the overnight session has done, we have about 329,000 contracts traded, which is fairly relatively high. And my expectation is that volatility is likely to carry through at least for the first and second hours of today before the holiday trade kicks in. We are now building a nice wedge, a nice kind of a flagging compression a play after an impulse up, and this is likely to resolve itself through the overnight high in the short term. Back to charts, you could see the profile is clearly indicating that there's a lot of pent-up energy against the high. We are well above VWAP, well above mid. We are above yesterday's highs, of course. We are gapping up, but the profile is showing pretty aggressive price discovery, and the area to watch out for is somewhere in 29.38 to 35 as a matter as a potential support before it starts to fail into the prior range. So this is how it's shaping up. I know this is getting long, but there's a lot going on in terms of what the market is doing with this gap. So there's a lot to explain, and we have actually this week exceeded several, took out some really important areas. So what's the current condition? Well, the current condition is that I need you all, I need you all to hit the like button today because it is Like Friday. Be a jubilant person and a happy person and hit the like button before you head out today. It helps people find the channel and the broadcast. Um, so why do I need them to find the broadcast? Because I have a vision. I've had a vision for a long time for what I want to do online, and that helps people helps expose people to that vision. This morning, I'm expecting a pretty aggressive open. I'm looking for it to push through the highs immediately, and then I'm looking for a selling response. I'm looking for it to hold sideways here in between 39 and 34, and then just go sideways into the holiday weekend. The secondary looks almost the same, except that the secondary scenario is expected to push the high and then get almost an open test drive response to 34 and then push into yesterday's high and back into 24.50 to test into this the 20 area, the overnight low, and the support area left behind from yesterday afternoon before it comes back out and it just sits sideways into the holiday. So we've gone a long way. Gap, gap and go yesterday, lower probability gap and go today. Okay, we've had several scenarios in this year where we had a gap and go, then a gap and go, but generally we don't get a gap and go and a gap and go 2 days in a row. So I'm expecting a pretty decent response, not to mention that we're going into a long weekend with who knows what's going to be tweeted or said or published or whatever, who knows. So those people who've had a good run here of about 100 points, from the most recent low, are likely to take something off the table or at least come into futures to hedge into the long weekend. So those are the two key scenarios. Because we're opening above the most recent balance in a gap, there's a higher probability, historical probability, that we are likely to see some sort of a drive. So open drive, open test drive, or open rejection reverse opening types are higher probability in this kind of environment because the market's clearly out of balance. When we have these gaps, the market's indicating that it's completely out of balance in its price discovery, and there are more people who are likely to participate in a strong way once the market opens. And that's really what scenario two is attempting to cover. Scenario three is a response, is an immediate response, open test drive up. And if we do get an open test drive up, we have some pretty significant areas to test above. So open test drive up starts to push us into 28.55, and then we start to get into that the high of last year into the 29.60. And then eventually we're looking for 29.65. And remember, that's where the low volume node starts right here. This is the last area of defense for sellers to keep prices down before prices get attracted, kind of like a space shuttle in between planets. You know, there's like a gravitational pull. Once we go through the low volume node, we start to get a gravitational pull towards the next high volume node up. And so sellers will want to kind of keep prices below 29.60, 65. And if we get an open test drive higher, that's likely where it'll stall, run out of speed. Okay, good luck today and have a wonderful weekend. Please be safe. We'll catch you back here on Tuesday morning. Take care.